welcome to Macro Matters. My name's Stephanie Kelly, and together with my co-host Paul Diggle, we'll be guiding you through the complex world of politics, economics, and markets. We spent quite a lot of time on the podcast recently talking about what COVID means for major markets in the developed world. We talk a lot about the US, we talk a lot about Europe and the UK, but what about emerging markets? How have they fared through this crisis? And what will the short and long-term impacts be on things like economic growth and on political risk? To help me answer those questions today, I'm delighted to be joined by Bob Gilhooly, our senior EM economist at Aberdeen Standard Investments, and Ed Glossop, who has just joined us as our EM economist. Thanks both for coming on the show.
Thanks, Steph. Great to be here.
Yeah, likewise.
So let's kick off just by talking about the EM experience of the COVID crisis overall. So how have the challenges of emerging markets differed from developed markets on those kind of key COVID issues we talk about, like vaccines and health systems and economic damage? Maybe Bob, I'll go to you first.
Thanks, Steph. I mean, I guess kind of fundamentally, many of the challenges are kind of the same between EM and DM. But I think we'd say that the tools that they have to face these challenges are often quite a bit weaker. And the trade-offs themselves can be a bit kind of starker and harder to manage. So I guess kind of rightly or wrongly, many emerging markets like developed markets have been trying to balance the strain on healthcare versus the economic damage that imposing restrictions to control the virus causes. The ability, though, of emerging markets to provide economic support is typically much more constrained, though, making it much harder to kind of lock down forcibly. Turning to healthcare, the healthcare strain is clearly a function of both the quality of health service, which can vary massively across the EM landscape, and caseloads. We've done a bit of analysis looking into this. And Latin America and Eastern Europe tend to actually kind of outspend and outrank emerging Asia, for example, in kind of measures of universal healthcare provision, kind of numbers of medical staff, kind of scaled to population. But the strain overall in Asia has clearly been much lower overall, reflecting the ability of the authorities within Asia to manage the virus much more effectively. So emerging Asia has generally actually outperformed, and even outperformed the US and Europe because of this. In the short run, economic damage reflects the severity of restrictions and the structure of the economy. It can be quite hard to judge how tightly the restrictions are in emerging market in practice. There can be a bit of a gap between the kind of rules and their actual enforcement, and this might be a bit wider in emerging markets than developed markets. And emerging markets tend to have a higher share of informal workers, and also higher shares of manufacturing and agriculture compared to developed markets, which changes, I guess, the nature of the shock, when you're adding up the kind of various sectoral impacts across the board. Really, only time's going to tell how bad the long-run damage is, but given more limited access to vaccines, EMs on the whole are facing a longer duration shock, and one where it's more difficult to kind of provide the fiscal or kind of monetary support that goes along with it. So really kind of raising the risk, I think, of greater damage. I mean, it does, of course, vary hugely across EMs. Some high income emerging markets, specifically Israel, but also Chile, are actually doing pretty well in vaccine procurement. Russia and China also stand out a lot, benefiting from their own vaccines and manufacturing capacity. But many emerging markets really are still to secure enough vaccines to even kind of try to cover their whole population.
So there's quite a lot of stuff in there that I'm actually keen to do just a little bit of follow-up, and then I'm really keen, Ed, to bring you in as well. One is, I guess you mentioned EM Asia coping particularly well, and is there any kind of evidence that they've benefited from having been through previous pandemics? So I'm thinking of SARS. I mean, was that an important marker? And I guess the other question, which is quite a popular headline, is that there's a kind of a demographic dividend for emerging markets with younger population. Is that borne out in the evidence?
I think I'd probably put more weight on the first question.
Right.
So I think emerging markets, particularly in Asia, they had learned quite a lot from kind of the experience of SARS, the kind of steps that might be necessary to kind of control it and act quickly. So, they kind of had a playbook for what to do in this scenario. Whereas I think it would probably be fair to say that most kind of European countries or the US didn't really have a kind of ready to go action plan. I think the demographics one, maybe the jury is still out a little bit on this. I think if we went back a year or, a bit more than a year ago, one of the big discussion points was, okay, well, will this virus really even have a big effect on emerging markets? Some countries, particularly like India, have got very young populations. Will they even bother kind of locking down to begin with? So I think maybe it's given them a little bit of extra kind of protection, but I think if you take a bit of a step back and think about, okay, well, many emerging markets are not that dissimilar, or some emerging markets are not that dissimilar to kind of developed markets, and they kind of both have had fairly torrid times. So I think that kind of demographics argument has got a bit weaker through the course of COVID.
Sure. No, I think that makes a lot of sense. I mean, you talked a little bit, Bob, about those countries that have outperformed during this crisis and what's driven that. Ed, when you look at the kind of, the lower rankings, which countries have really struggled during this crisis, and what were the kind of factors you think made them so exposed to this particular kind of pandemic?
Yeah, that's a good question. I think the region that's probably struggled most, although you wouldn't see it in the COVID cases data, is probably the very low income EMs like those in sub-Saharan Africa, where we have very low levels of testing, test and trace, but there are suggestions that excess deaths are very high, and lockdowns in lower income EMs are much less feasible. With larger households, makes it harder to isolate, and as Bob alluded to earlier, lockdowns can be much harder to enforce with a large share of informal workers. And also these are the EMs with very, very severe fiscal constraints, sometimes, sovereign debt problems, etc. And of course, these low income EMs are late to the vaccine rally as well, because of slow delivery through the COVAX system and low levels of procurement. Among the kind of more middle income EMs, there has been a lack of fiscal support in places like Mexico and Colombia, where although fiscal positions are generally quite robust, at least compared to some EMs, governments are very concerned about their credit rating. So that's constraining them in that respect. And of course, in a lot of these countries, positive test rates and excess deaths, these kind of alternative measures of how the vaccine, the virus is spreading, given the lack of testing, are very, very ugly, some of these data releases. So economically, that is weighing on GDP and the economic recoveries.
So that's really interesting what you just said there about country ratings, because I just had never thought about that would be going into the decision making that happens around COVID. And again, this is my very strong developed market bias kicking in here, that countries were willing to just spend their way out of the crisis in European countries, in the United States. How big of a constraint is that then in emerging markets? I know you've mentioned a few. Is that something you see quite widely, or is it that specific to places like Mexico?
I think you do. I think that there was a certain degree of EMs showing some maturity during the crisis, the height of the pandemic last year. We did see some quite large fiscal stimulus packages in the end in some EMs compared to past standards, compared to the global financial crisis, for example. But I think this year, certainly, there are signs that, the sort of old constraints, if you like, are starting to bite in EMs. We've seen a rise in US Treasury yields, and that is causing some EM central banks to start tightening monetary policy or think about tightening monetary policy. And of course, that's also pushing up government borrowing costs in EMs as well. So I think Colombia and Mexico are quite unusual, I would say, in that they are very concerned about their credit rating and what downgrades might do to their borrowing costs. But I think in general, EM dollar bond yields have risen so far this year, and that will be another constraining factor for EMs, and we're likely to see fiscal policy be less supportive this year than last year.
Well, that's actually almost partly answered the next question I was going to ask you, which is around how the interaction is between developed markets and emerging markets. And in particular, I mean, what are the key things that you're looking for in developed market policy that will matter for emerging market outcomes? You mentioned a couple of them there. Are they the kind of key factors that you're looking for? Are there other elements that you're kind of keeping a close eye on?
Yeah, so that's one factor that we have this tightening in kind of this rise in US yields, and that is helping to that is causing financial conditions in some emerging markets to tighten, causing some central banks to raise interest rates, and impacting fiscal plans in terms of policymakers starting to unwind some of the fiscal loosening. You have to trade that off against the fact that ordinarily we would say that stronger US growth via the fiscal stimulus would be positive, would create positive spillovers for some EMs. Particularly places like Mexico, where exports to the US are about 25% of its GDP, which is very large. Places like Costa Rica too, very huge figures here in terms of their reliance on the US. But I think it's worth bearing in mind, though, that it's actually quite nuanced, because we've done some work in the Research Institute in ASI to suggest that US goods consumption may have peaked. And so even with this fiscal package coming through, much of that extra spending may well take place in services rather than consumer goods imports. So that is a reason to potentially expect the spillovers from stronger growth in the US to be perhaps more modest than in the past.
So do you think, I mean, it's interesting you mentioned the kind of services goods trade-off, because Bob, I know in your initial kind of discussion of the ways in which EMs were affected by COVID, the kind of lower reliance on services as kind of a source of economic activity in emerging markets compares quite sharply to DMs, where we know services and the fact that restaurants had to close and all that kind of stuff has really been a constraint on growth. This almost sounds a little bit like some of the factors that have constrained growth in developed markets, as COVID kind of result, or as COVID cases fall, vaccinations rise, and you get reopenings, the bounce back in services won't necessarily then have a positive spillover to EMs as a result of the fact that they're not really tied in. There's no tie-in necessarily with those services firms in the way that there are in goods manufacturing supply chains.
Yeah, I think Steph, that's pretty much nailed it. I mean, as well, if you kind of think about the kind of path of the crisis, I think we were all actually kind of pleasantly surprised following emerging markets, the global trade. Okay, yes, there was kind of shutdowns, which led to some very, very sharp contractions in kind of some countries' abilities to export. But actually, once they got kind of past that initial stage, having a relatively large share of your economy being manufacturing or exporting, when you've got this big rotation of consumption within developed markets, away from services and towards goods as well. Stuck at home, we need more IT equipment, got to get our kids more iPads and laptops to do homeschooling and just entertain ourselves, I guess, more generally as well. I think that kind of has propped up emerging markets, definitely through kind of the course of 2020. But, as Ed was saying, there's the flip side to that, is normalization in developed markets. That kind of unusual dynamic that we've seen over the course of COVID is going to unwind in one way or another.
Yeah, absolutely. Gosh, it's really quite striking, I guess, the relationship that there is between emerging markets and developed, but also the extent to which emerging markets are somewhat on their out with the supply chains. Their experience of COVID was separate, and that's where I kind of want to draw on as well the political element. Again, we talk a lot about politics on this podcast, particularly. I often have guests on to talk about US politics, European politics, UK politics, but I'm really keen to understand actually the emerging market space. Populism has been this challenge for investors in developed markets in recent years, and kind of ever-present question of, is populism dead in developed markets? But actually it seems like emerging markets face significant issues with authoritarianism and relatedly populism too. How different is, I guess, the experience of populism in emerging markets? Maybe Ed, I don't know if you want to take a first go at that.
Yeah, I think there are some similarities in terms of the drivers of populism with DMs, not least kind of weak economies. But I think with EMs there are very specific issues And one of them is just simply the income convergence with the developed world. If for many countries hasn't happened over the past 10 years. We had a period of convergence in the 2000s, but that particularly within the commodity producers because of the commodities boom, and that really proved to be a one-off. So living standards in a lot of emerging markets have actually fallen relative to the US over the past 10 years. And against that backdrop, we also have like a general disenchantment with political classes. Inequality has risen, as measured by the Gini coefficients, and I guess all this reflects the idea that, as I say, the 2000s were a one-off period where there was exceptional growth, partly because of the commodities boom, but partly because EMs really picked some low-hanging fruit in terms of reforms in the 1990s and the 2000s. Inflation fell sharply. Policymakers cleaned up balance sheets and banking sectors. And now EMs really, you could argue, are facing a period of, kind of structurally weaker growth and need some more structural reforms if they're to, stand a chance of converging with US living standards. Of course, the EM world has two of the most controversial populists in Bolsonaro in Brazil and Lopez Obrador AMLO in Mexico. And, peculiarly, Bolsonaro is obviously a right-wing populist, AMLO left-wing. But while they're on kind of different sides of the political spectrum, it's interesting that both have tended to play down the COVID crisis and the efficacy of masks and lockdowns, etc. And I think it's hard to argue that against the fact that preventing these two countries from getting control of the virus. And it probably seems to be that playing down the virus may also be playing a role in the disappointing vaccine rollout, because policymakers just haven't really placed a lot of emphasis on vaccine delivery.
That's super interesting. And I like that you pointed out this thing, which is that people always assume, particularly when I'm covering in developed markets, is that populism is this like catch-all phrase for kind of, I think what people really associate in developed markets with like authoritarianism, right? It's like there are left-wing populists and right-wing populists, and the policies look quite different. I'm really keen to have a bit more of a chat about Brazil, actually, and particularly, I guess, this question of whether Bolsonaro being re-elected will be good or bad. But maybe before we get into that, how have the political systems in emerging markets affected COVID outcomes? So you've kind of touched on particularly the impact it's had on kind of vaccines. Maybe Bob, particularly in China, how do you see, I guess, the role of the political system, which is so different in China, having affected its path when it came to COVID?
Yeah, thanks, Steph. I think it's definitely the case that the different political systems have, affected the COVID outcomes and the economic outcomes. I think looking at it, China's public and kind of state apparatus and state capacity do kind of look like they've paid off. What looked like quite a draconian response initially, and has been followed on, still with quite a kind of zero tolerance regime since then, has kept COVID cases at fairly negligible levels. And as a result, the Chinese Communist Party has been very much pushing the message at home and abroad that this is a benefit of the Chinese governance model. They of course wouldn't use the term authoritarian. That's probably a debate for another time. I think less clear though, I guess, is maybe whether this tells you much about, I guess, the merits of authoritarianism. To take a couple of counterexamples, Australia and New Zealand had fairly negligible case numbers since October too. The Philippines, which has kind of shown some signs of becoming increasingly authoritarian, has had one of the weakest economic recoveries to date out of all the kind of major emerging markets. So, maybe it tells us a bit more about kind of either societal preferences, kind of reflecting the individual versus the collective, and also kind of relatedly, I guess, the willingness to use kind of technology for monitoring and controlling COVID itself. Clearly, I think authoritarian states do have somewhat of a penchant for using technology for monitoring.
That's such an interesting point, because I think that exactly what you said, it's not just as simple as labeling a society, authoritarian or not. But there is an interesting question, which is, are there certain kinds of political systems that are more willing or able to impose quite stringent lockdowns? Because that seems to be stringent lockdowns, very effective track and trace. Mm-hmm. When you named the countries, even New Zealand and Australia, you look at those countries, what you see is countries that have been really effective in terms of actually having very aggressive lockdown, very aggressive travel conditions, and very kind of active policy making, right? Which is what you can get just more easily in an authoritarian state if the authoritarian state chooses to go that way. And maybe this comes to Ed, to your point about Bolsonaro, who, in kind of political science terms, fulfills some of the criteria you might see around particularly right-wing populism. But you could have mentioned already that his approach has been actually not particularly stringent when it came to kind of cracking down on COVID, mask wearing, etc. So it's kind of the power you wield is only as important as the choices you make. So when you think about the upcoming Brazilian election, you mentioned already the role of Bolsonaro, and I think there's a generally somewhat pessimistic view of Bolsonaro from the COVID perspective. But when you look at it from a growth perspective, what is a quote unquote kind of good growth outcome, good economic outcome from these upcoming elections? Is it Bolsonaro getting reelected?
It's a good question. I think you're right that Bolsonaro is a double-edged sword in many ways. I think he has really botched the response to COVID, as you rightly suggested. But he's popular with investors. He's popular with investors because for two reasons. A, he has appointed a fiscally responsible finance minister, so he's steadied the fiscal ship to some degree, or at least that's his rhetoric. So that there has been various reforms on the fiscal front, and secondly, there have also been kind of micro structural reforms going on in the background, which should boost potential growth and reduce what is often called the Brazil cost, which is essentially just the very, very large cost of doing business in Brazil, lots of red tape, etc., and it takes a long time to start a business, and all these sort of microeconomic constraints. So he's starting to lift that as well and do some privatization. So he is popular with investors. I think as we approach the election, there is a risk that Bolsonaro the reform agenda starts to fade, and also that he turns to fiscal loosening to shore up his support base. The cash handouts last year as part of the fiscal stimulus were very popular and boosted his support. So I think there is a very real risk that he starts to become more fiscally irresponsible as the election approaches. It's also worth bearing in mind that fiscal policy always loosens ahead of general elections in Brazil and Latin America more generally, so it wouldn't be a surprise if that were to happen, and that would not go down particularly well with financial markets. I think with the Brazilian election, there is a risk, that it becomes very polarized, with ex-president Lula, who is a populist on the left-hand side of the political spectrum, were to win in the election. I think that outcome would probably spook investors. Although, as I say, it's very too early to say whether he will run, or whether he will run against Bolsonaro.
Right. No, I think that was super, super useful. And I think, we can't talk about political risk in emerging markets at the moment without talking about Turkey. I think in particular this week has underscored some of the concerns that investors have. I'm interested just to get your take on, the Turkish kind of policy environment at the moment, and what your view is on what's going on and what the implications are. Yeah,
maybe I'll jump in briefly, Steph, and then Ed can chip in on this one too if he's got kind of points to add. I think Turkey's a really good example there. It doesn't necessarily take voters going to the polls to get kind of emerging market political shocks, and here we've got a definite, a large swing away from, what had been deemed a kind of move towards more kind of policy orthodoxy, more market-friendly measures. I'm not sure if it's a record or not. I was trying to research this earlier. This is, of course, President Erdogan's fourth central bank governor within 2 years. I could only find one, which is Liberia, which had three central bank governors within a period of kind of 2 years before. So, just really highlighting there on a slightly more serious note, kind of how much churn there has been within a kind of key policy institution within Turkey. And, Turkey's been on our kind of highest risk rating for quite some time now. And Ed and I have been furiously writing about Turkey this week, and kind of to the extent that, this shift back to unorthodox policies is, in many ways really complicating the kind of policy balancing act. We've got a desire for kind of lower interest rates as signaled by acting central bank governor. But, we've got very high inflation. We're looking at core inflation on a month-on-month frequency. That's actually averaged about 25% annualized over the last 3 months. We've got very low FX reserves, current account deficit, put all that together, and you're really in a very unenviable position. The use of banking system assets does give the authorities some, room to maybe prop up the exchange rate, give a bit more room for kind of muddling through, if you will. But I guess the kind of, the very long run questions are whether the authorities really have the tolerance for the kind of potential slowdown that might truly kind of unwind balances and put Turkey on a more sustainable footing going forward.
That's really interesting, in particular, because it kind of touches on this point we talk about a lot when we talk about political risk and markets kind of globally, which is the difference between sort of cyclical political risks and institutional political risks. And I think it sounds like Turkey is a good example of when your institutions are built in such a way that they can be easily interfered with politically. It can, alongside a sort of political norms that are developed, I think it can lead to these quite dramatic outcomes. And in some ways, that's been the differentiator between developed and emerging market populism in recent years, is to an extent populist impulses in developed markets have been constrained by the institutions that are kind of long-term developed in those developed markets, in a way that it sounds like in emerging markets you just don't have that same safety valve, I guess.
Yeah, and I think you see that in probably other countries aside from Turkey. Last few years in Turkey we've seen a centralization of power around President Erdogan. That gives him more scope to kind of bend the institutions to his will. And as you say, that creates that kind of institutional risk. There's other major EMs like kind of Hungary, I guess, kind of maybe another example of one where the kind of the political leaders are kind of damaging the institutions that could maybe be acting as a bit of a kind of a buffer in kind of normal times.
Yeah, absolutely. So maybe let's jump then to the next section, which was, we were hoping to talk about vaccine diplomacy. This is something, Bob, that you've been on to talk with us before about, maybe a month or two ago. But I just wanted to speak quickly on the kind of latest, because China and Russia seem to be at the center of a number of vaccine diplomacy disputes at the moment. So I thought we could start with China, which is, as we've talked about before, China has this kind of long-term strategy, and vaccine diplomacy seems to be a part of it. How successful has the kind of Chinese vaccine diplomacy effort been thus far? It's very early, I realize. If you were to say, when you look across the approach they're taking and the outcomes they're getting, what's your take on it?
Yeah, I mean, as you said, we were discussing this a bit recently in the previous podcast. I think it has been reasonably successful overall. I think with developed markets kind of really focusing on their kind of home nations, China has been kind of filling the gap, if you will, to expand kind of its soft power and its reach within different countries. It's a little bit opaque. It looks like Chinese vaccine donations are to around about 50 countries worldwide, and they've got commercial agreements with what looks like around about 30 or maybe a bit under 30 countries. And that's quite in many ways quite a generous scheme. Could potentially equate to almost about a quarter of their national production. So in that sense, vaccine diplomacy is very much in full swing in China.
Absolutely. And then Ed, I might bring you in then on Russia. So There's been a lot of talk on this podcast about the EU's vaccine rollout issues. How does Russia fit into this debate, and where is Sputnik being used? So Sputnik 5, I think, is the name of the Russian vaccine.
Yeah, you're right that this has. There are no shortage of takers really in EMs in terms of the Russian vaccine, much like the China vaccines. Of course, much of the former Soviet bloc have procured the Russian vaccine, but also interestingly, much of LATAM, Africa, the Middle East, places like India, Brazil, Argentina, Mexico, Egypt have all procured the Sputnik 5 vaccine. And as you mentioned in Europe, so Hungary and Slovakia have gone outside of the centralized EU procurement and secured Sputnik 5 doses. And, interestingly now, more advanced in their rollout relative to the rest of Europe. So certainly the Sputnik 5 is gaining momentum, and there's no shortage of takers. I mean, there is a lack of transparency on the efficacy data. But I think it kind of is worth noting that Russia has kind of a rich history of virology and vaccine development. It's actually quite impressive. In the 1950s, Russia and the broader Soviet Union actually played a major role in producing and testing the polio vaccine, for example. So, I mean, clearly there is a lot of uncertainty there about the efficacy, and I think it's worth flagging that there is a general risk that use of what might prove to be ineffective vaccines backfires and kind of feeds into Stokes' anti-vaxxer sentiment. I suppose that would be a particular risk.
I think that's interesting that you raised the question of whether it's effective or not, because I think there is debate, at least in terms of the market environment, and I think the broader kind of societal environment, which is whether Western produced vaccines are necessarily more effective or safer than the Chinese vaccines or the Russian vaccines, for example. I'm interested from both of you to understand, is there data to suggest that Western vaccines are more effective, or is it more maybe reflective of what you've just said there, Ed, around, I guess, belief in the institutional transparency of these big countries affects people's willingness to believe in or are, not just people's, I mean, I guess medical doctors and the scientific community might have a little bit more skepticism because of that transparency. Because I guess my understanding was that Sputnik 5 results were released to the Lancet, right, which is a very well-respected scientific journal.
Yeah, I'll go first, and then Bob, maybe you can chip in. Yeah, that's a good point, Steph. The efficacy numbers that on Sputnik 5 that at face value are very good. I think that, as you say, the bigger issue is the transparency of the whole process, and I think that is the main risk for people that could stoke the anti-vaxxer sentiment, not necessarily the reduced efficacy.
Bob,
yeah, and I think that's it. It's the kind of the lack of transparency makes it so difficult to judge. So I really struggle to judge what I think the efficacy of the Chinese vaccines is, and you mentioned that the Lancet report saying 90% efficacy for Sputnik. I mean, that's great if you take that kind of face value. I think this is kind of flagging the danger of kind of the lack of transparency. I was just reading actually a report by the Levada Center, which just conducted a poll within Russia, and that reported that only 30% of Russians were actually willing to take the Sputnik vaccine. So, there is a cost, I think, to not being transparent and kind of building confidence in your vaccines by really being open, letting people show how effective it can be.
Yeah, absolutely. And I think it's also, it's worth noting that, the point that Ed made earlier about the relative success that Sputnik is having in some Eastern European countries. And I think even I've seen headlines suggesting that Germany might be considering or might have provisionally agreed to look at using the Sputnik vaccine as well. I think there's a foreign policy element to all of this, which is, again, we've talked about it before, vaccine diplomacy is real. And actually the whole reason for European procurement, one of the rationales underlying it was to ensure that all European member states were receiving a Western vaccine, i.e. not reliant on a Russian vaccine. And that's a very foreign policy incentive that has very little to do necessarily with COVID, but obviously does kind of play into these issues around transparency and relative kind of power that you wield if you are a major vaccine producer. That might link us finally to just the last question I'm going to ask you each for maybe one sentence, which is around the impact of the new US administration. So the Biden administration obviously has lots of implications. We talk a lot about US-China relations on this podcast and in our writings, but I'm interested to know what the kind of economic and foreign policy impact of the new US administration is likely to be for big powers like China, Russia, for LATAM, particularly, but also then for smaller EMs that might get caught in the US-China crosshairs. So maybe, Bob, I might go to you first in terms of the China effect and that kind of smaller EM effect.
It's a difficult one to sum up in one sentence.
I'll give you two.
Okay, I'll two. So I think the kind of economic tools, or tariffs and so on, are kind of, they kind of look like they're here to stay, effectively. But I think what we kind of are seeing maybe is a bit more kind of ramping up of like non-tariff actions. More recently we've kind of seen both US but also EU kind of sanctions against China. So I think there's some really difficult choices there about kind of what the US's like ultimate aims are. Is it really willing to trade off economic access versus kind of human rights, or indeed is the environment some sort of bridge to kind of smooth over relationships? I mean, maybe actually I might just pass over to Ed for the kind of LATAM one, because I think that's kind of quite illustrative of kind of some of the smaller EMs in a way, and kind of how the US administration's kind of change of policy, particularly the transition, I think, from Trump to Biden, is probably a good talking point.
Yeah, absolutely. I mean, LATAM, as well as most other countries in the world, should benefit from reduced political uncertainty from the White House, particularly with diplomacy and trade policy not being conducted by tweets. I think more generally on LATAM, I think there are probably two key areas to watch for where Biden might have an impact. The first is migration from Central America. We see this links to the vaccine diplomacy points that we spoke about earlier, but the US has agreed to send surplus AstraZeneca vaccines to Mexico as well as Canada, and Mexico, it appears, in return has tightened border restrictions with Guatemala and Belize, for example. I think the second topic to mention is obviously Biden's climate change agenda, which could put pressure on some LATAM countries and some countries elsewhere in the EM world. Obviously, US-Brazil relations could start to sour over the deforestation of the Amazon. That clearly wasn't an issue for Trump, who struck quite a close bond with President Bolsonaro. Biden's focus on clean energy could put downwards pressure on real oil prices over the medium term and potentially hasten peak oil, which would weaken long-term prospects for oil producers in LATAM. So, for example, Colombia, Ecuador, Mexico, Venezuela, which could lose market share to the lower cost producers in the Middle East.
Gosh, that's quite a substantial, I guess, set of changes that LATAM faces in particular, but maybe beyond in terms of the change to the Biden administration. We'll have to have you both on again to have a longer conversation about that, because it feels like such a huge topic that we could spend an entire episode on. But I'm sure that my producers will start to give me the signal now that we need to wrap up for today. Thank you so much, Bob and Ed, for your insights and candor. I think we've been able to cover a huge amount of ground, and we'll have to absolutely get you back on in the near future to dig into these issues a little bit more. Huge thanks to our audience who keep providing so much support and interest in this podcast. If you have any comments on the discussion today, questions or ideas for future episodes, you can email us at macromatters@aberdeenstandard.com. In particular, at the moment, we are asking for young economists who might be studying at university to get in touch with us with any topics that they're really interested in, maybe what they're looking at to do their thesis on, and they'd like to hear us dig into those issues a little bit more. So please do get in touch. Otherwise, please join us again next week.
Please note that email is not a secure form of communication, so don't send any personal or sensitive information. This podcast is provided for general information only and assumes a certain level of knowledge of financial markets. It is provided for information purposes only and should not be considered as an offer, investment recommendation, or solicitation to deal in any of the investments or products mentioned herein, and does not constitute investment research. The views in this podcast are those of the contributors at the time of publication and do not necessarily reflect those of Aberdeen Standard Investments. The value of investments and the income from them can go down as well as up, and investors may get back less than the amount invested. Past performance is not a guide to future returns. Return projections are estimates and provide no guarantee of future results.